I'm Max Sandlin. This is the Honors College Podcast with Honors, and today we have a most honorable guest, my friend Bennett Holloway, and we've got a question coming in, and the question is?
Do you guys think cryptocurrency is a scam, or do you think it's the future of economics?
Bennett, first of all, are you qualified to answer this question? What do you do? Who are you? Tell our listeners about it.
Well, first of all, thank you for having me on the Honors College with Honors podcast. Longtime listener. I'm not sure I'm qualified to be on this podcast.
You mean you've never heard an episode?
Longtime listener, and no, I don't think I'm qualified quite to answer that question. I would probably change the question and expand the potential answers. So let's dive right into it. What do you say?
Tell me what you do for a living.
Okay, yeah, that's a good
What's
place
your
to
connection
start.
with crypto?
My connection with crypto is I started in commercial and investment banking at JP Morgan. So I was banking fintech companies.
Fintech means financial technology.
Financial technology. Yes, we'll limit the abbreviations and
all right,
acronyms
I'll just ask
here.
when you say it, yeah.
And so then I left that after about 2.5 years, and I now work for a research firm based out of New York that sells research and data to institutional investors who are allocating capital to the blockchain and crypto ecosystem writ large. And so put together research reports, events, media, podcasts.
My impression is that you're
media
sort of like a PR person for the crypto industry. You give education, you help do networking, connect things, and educate, and like let people know like what it is and what's happening with it. Is that right?
Yeah, we're more so targeted towards institutional investors. So
Tell me what an institutional investor is.
An institutional investor is what you think of when you think Wall Street, raising large $500 million funds, and then trying to invest in the founders and companies that are going to return a handsome sum on that capital. So if you've seen The Big Short, for example, those sorts
Great
of kind
film.
of like 4 to 20 person teams who are trying to find the next greatest
Hedge
trade in
fund,
the market.
Investment bankers,
Yes.
that sort of thing. Okay, very cool. So you work in it. Your job is to kind of be in the know and give in the know information to people who might make investments that would pay off for them and also help the industry.
That's right. That is the Blockworks platform.
All right, tell me this. What is, you said the word blockchain earlier. I know a lot of, especially young people, know more about crypto than older folks, but let's just imagine somebody's like, I don't know what cryptocurrency is. Bitcoin's a word I hear, but I really don't know what it is. What's cryptocurrency?
Yeah, so a blockchain, think of it as a different sort of database. Right now, when you think of database, you think rows and columns. A blockchain is an alternative architecture to sort information. It's organizing information in a particular way that's linked to a sequence of time. So the block component is there's a batch of information that's kind of one publication of information. So think of that as a cell. And then the incremental input or incremental cell, the next block, is a new set of information, but it's linked to the first one. So that's at the highest level, that's kind of how I could describe it. And then crypto and cryptocurrency is a very broad term. The kind of primitive within these technologies is cryptography. So if you've ever seen The Imitation Game, where
Codes.
in World War II, encrypted codes. So a message or information that's then run through an encryption, scrambled, and the only way it can be unlocked is with a specific key. And it's all transmitted over public and open information waves. So in The Imitation Game, the task of the Allies was decrypting Nazi messages they were encrypting with their Enigma machine. So what crypto is that general suite of technological primitives applied to financial technology or financial applications. And the currency bit is linked in because in some cases, but not all, the medium of exchange or the currency that's being used in financial agreements is using blockchains and these sorts of tokens native to those databases, and it all kind of gets that high-level label term slapped on it. But it's a field as vast as the term finance. So it's difficult to kind of break down the taxonomy of everything that's going there. But those are the kind of key ingredients.
It seems like when people talk about cryptocurrency, they're saying like it's an alternative source of money. When I think about it, when I'm reading about it or whatever, I think of it as, well, there's the dollar, there's the franc, there's the yen, and then there's cryptocurrency, which isn't tied to a particular, nation's coins and dollar bills or whatever, but it is something you can buy and spend. But I guess the truth is, like you're saying, finance as a whole, you can buy and spend real estate or stocks or futures on stocks or, all sort of really complicated things, a medium of exchange in which you say, I'll give you this and you accept it and you can give it to somebody else to get a product eventually down the line.
Yes.
Is that right?
Yeah. The standard definition of money would be 3 properties: the unit of account, so can you number it? The medium of exchange, so what we talked about, you can trade for products and services, and then the store of value. And so that's kind of the most subjective kind of characteristic of it. But yes, I mean, you listed a lot of monies. Commodities used to be the most common money.
Tell me what a commodity is.
A commodity is something that's abundant as a natural resource. So metal, wheat, bricks, seashells, things like that. Those have all, beaver pelts have all been used as money. And so this, the aim of crypto writ large, or Bitcoin in particular, initially was to separate money and state. So the dollar, the franc, all of those monies you listed are administered by governments and central banks. So kind of that very neatly kind of walks us through the 3 general chapters of money that have kind of, occurred through history. You had commodity money, which, gold bars, gold coins, and then kind of in the mid to late 20th century, fiat or government decree monies really kind of became the most common paper money. So that's all the ones you listed. And then now there's this kind of interesting question, which is the conversation we're having today, or do kind of digital currencies or cryptocurrencies pose, a threat to the incumbency of fiat money?
I think about my mom the other day was trying to move, we're trying to get her to move her money from a bank, local bank, to an online bank that had a higher interest rate. And she was really worried. She's like, where will my money be? And I was like, what do you mean, where will your money be? It'll be in this bank. She's like, but that's just an app on my phone. And I was like, yeah, but when you go to your bank, your money's not sitting back in the vault. I felt like, George Bailey and It's a Wonderful Life. No, your money's not here. It's in Frank's house and all around town. And so I think, like, we think about money, the average person thinks about money as something you can hold in your hand, but increasingly it's just like an IOU. I think of that, so like money's 100%. Kind of an IOU, right?
Yes.
And it's interesting because...
A bank deposit, more specifically.
Yeah. I owe the bank.
Yep.
Right? The bank guarantees that I'll pay my IOU or whatever.
Right.
So cryptocurrency is this money that's not founded on a nation. Like, for example, if the United States of America were taken over by a hostile power and eliminated, dollars would only have value as historical artifacts. The same way that, like, I don't know, Confederate money, for example, people collect it because they're historically interested, but you can't spend it anywhere because it was based on a state that existed, and that's not now. So cryptocurrency, they're saying this is not based on a state, and that frees it. But what is it based on? Yeah,
so the confidence placed in the state when we assign it the kind of guardian and administrator of our money is that they will uphold the confidence of the system that we're participating in. And so the confidence, and that's all maintaining ledgers. So Bank of America, JP Morgan Chase, that all settle to the Federal Reserve, the U.S. Central Bank. That's a monetary order that is backed by the full faith and credit of the U.S. government. There have been breaches to that trust in the form of bailouts for large investment firms, circa Big Short 2008, and even seizures of private citizens' assets. If you take a look at the Eurozone financial crisis around 2012, there was an instance where in Crete, the island in the Mediterranean, any citizen that held over 200,000 euros in and around that time, they were just confiscated. So there's
By the central bank?
by the central bank, and they were used to cover their bad debts.
The Greek bad debts.
Yes.
Yeah.
And so there's been breaches of trust in that general kind of arrangement, though it still works well for us, and we don't
Generally,
feel,
we trust.
Yes.
Generally, we trust. The U.S. dollar says this. Is what does it say on it? It's reliable, or it's legal tender. That's what it's legal tender for all debts, public and private. And we're like, yeah, I believe that. But if it were issued by, some government we didn't believe in, we'd be like, no.
yes. So the promise, and I'm going to speak about Bitcoin in particular versus kind of
That's
the broad
nice. Limit it
swath
down,
of
cryptocurrencies.
The promise is removing that degree of trust from the users of it versus who's enforcing the rules of the network. So Bitcoin is a protocol. It's both an asset, and we speak of it as a currency and an asset, but really it's both an asset and a protocol. What is a protocol? It's a enshrined set of rules that govern how information flows in a network. So it's sort of a constitution, or like an engine for how some digital network type works.
In a computer program.
In a computer program. And then what's confusing is then the medium of exchange within that network, within that program, are also called Bitcoins. So that's what things are denominated in. And the whole point of that is to have a ledger that's immutable or unalterable by any outside force. It's just a hard-coded system that executes whenever the certain conditions are met, and an external actor like a state or a corporation can't come in and say, oh, well, actually, we're going to, kind of backtrack these transactions, or, oh, if your balance is 201,000, we're entitled to that 1,000. It's just a kind of neutral financial hub of activity.
Sounds like it's trying to do some of what the gold standard or the silver standard was meant to do in earlier economies, where every British pound was backed by sterling, the British silver reserves, or gold bars were backing the dollar. And somehow that was supposed to mean like, okay, a dollar's worth in what? Because we've got Fort Knox full of gold. But really those species standards, those metal standards, weren't standard either, because the price of gold went up and down at the same time. Does the same thing apply to this digital standard? Like Bitcoin is a standard currency. Doesn't its value fluctuate, or can it function as a stabilizing standard for other currencies?
Yeah, well, it fluctuates wildly because it's denominated in our kind of typical store value of the US dollar. So if you look at a 5-year price chart of Bitcoin, it's swung anywhere from $19,000 priced in US dollars to $122,000. It would be a very wide chasm for us to cross to enter a place where Bitcoin is accepted as legal tender for products and services, to where it'd be units of products and services priced in Bitcoin. And then that volatility would be removed if that became the standard denominator of products and services.
If it
replaced it, but
dollars and such.
That is a very wide chasm to cross, and that was its initial vision. If you look at the white paper, which is kind of the founding document of a software project, it says this is a version of peer-to-peer digital cash. So in being digital cash, that's the idea, but the narrative that it's kind of taken on, certainly on Wall Street and kind of in institutional finance writ large, is that it's a digital gold of sorts. It's sort of a reserve asset. It's a part of, similarly to gold, a debasement trade. So you
have to explain what that means.
The debasement trade right now is basically this. Inflation is running hot. Post-COVID, our government is printing more and more money to cover the large and growing deficit that we have. That weakens the dollar.
And that's been growing since the World War II, right?
Oh, yes. I mean, so it's just only accelerating.
Since the Reagan administration dropped with Clinton.
In 1971, he removed us from the gold standard, and it's been off to the races. But in the last 5 years, it's been greatly accelerating because our federal deficit is greatly accelerating. So investors not wanting to hold dollars because their purchasing power is being eroded by inflation are seeking debasement hedges, a hedge.
Anything to buy.
Yeah. And so hard assets, hard meaning fixed, like a commodity like gold, or in Bitcoin's case, because it's got a capped supply and a fixed supply that
there
is
are only so
unalterable.
many Bitcoins, and there only ever will be so many Bitcoins, and they haven't all been discovered or mined yet, right? Too
Mostly, but what we mean by hard money is that it's hard to bring into the current supply. So you can bring more gold into the supply, but you have to mine it, and that's a hard thing to do. Versus easy money, which is kind of what the dollar is at this stage of the Federal Reserve through its different kind of levers can, on a whim, untethered to anything else, print, $2 trillion to fund a big beautiful bill or something like that.
Did they do that?
Well, it's a lot more complicated than just typing $2 trillion and putting it into existence, but effectively the tools to create $2 trillion over the course of a couple weeks are very feasible, and the only reason those large omnibus bills from COVID to now continue to be funded.
So is that why we see like students who are playing around on Robinhood or E-Trade or whatever? Is that why we see things like the price of gold going up, the market going up, and Bitcoin going up? I'm thinking like both the price of gold as a commodity and also like the price of physical gold. If you go to a jewelry store, if something has gold in it, it's more expensive than it was 5 years ago, like dramatically more.
Yes, it's certainly one of many factors. The other probably larger contributing factor than retail buying of gold is that central banks are buying gold, because a large trend in markets right now is every central bank has to hold reserve assets, and most hold U.S. treasuries and U.S. dollars, and there's a secular trend away from that, and so kind of the next best alternative is going out and purchasing gold, and that's a very long rabbit hole, but yes, it's one among many factors. And so then you mentioned kind of like Robinhood, students trading. That there's a very sports betting, very pronounced trend of hyper financialization, where culturally it's just kind of by default what a lot of the younger generations do in their friend circles is put money up for whatever they're interested in, like fantasy football, bet, watching a game on Wednesday night, bet, actively trading markets when that didn't used to be a hobby. Now it's a incredibly popular hobby. So crypto kind of plays a part in enabling that as well.
So I think what I heard you say earlier, I want to go back to something you were saying when the white paper came out, the first here's what Bitcoin could be. The idea was a universal, untamperable, like they can't tamper with this currency, and it will eventually replace all currencies, and we'll only just trade Bitcoins and it'll be fixed and solid. But it's not been that. You're saying that's kind of like we've moved on. Nobody's trying to do that with it anymore. So I guess the question I'm interested in, and this is kind of a macroeconomic theory kind of question, is like, where does value in a currency come from? And you mentioned earlier confidence. I wonder if you just talk about that a little bit. Like, dollars have value because they're rooted in the government, but isn't it really just about confidence? That is, that a lot of people say, oh, the U.S. government is reliable and its dollar is reliable, so I'd rather get a dollar than a euro or a yen or whatever. And is currency something more than just confidence that gives it value?
Well, money is a network effects game. So I would say in addition to that confidence, which I thought you provided a pretty solid explanation of, there's a network effect in the utility of money. So the dollar has a tremendous head start because it's pervasive in every element of our economic interactions. And so it's
globally too, since World War II. I mean,
I mean, it is the global reserve currency. That is to say, it denominates pretty much all trade. Oil, that's the big one. Everything else kind of downstream of that. And so the idea that there would be an additional kind of ingredient to the trust placed in that system versus like it has the incumbency, it has the general belief. I mean, that's about it, because it's not tethered to a specific promise for redemption in gold. It is very much a confidence game.
So really, I mean, like we could all just decide that blue shirts were what we traded, and suddenly blue shirts are valuable because we all just decide it. But with Bitcoin, nobody thought it was valuable, and then a few people thought it was valuable, and then a lot of people thought it was valuable, and then people, that's kind of why you see the swings in it. Tell me this, just because I want to be sure we hit some of the, I think, interesting history of Bitcoin. The early adopters, the people who were most excited about it early on, were either young people speculating, heard about it, but also drug dealers, the black market, criminal activity. Tell me about that.
Absolutely. Well, so going back to money being a network effects game, all technological development, and if you look at the early internet, the kind of adoption curve begins with very dark, very illicit activity. So the internet scaled and gained network effects partially through military use in the early days, partially through academic use. But when things really got going, it was because of, adult content.
Porn.
And yes, to say it plainly. And so that network effect, it has a parallel with Bitcoin's early days. There was an exchange called the Silk Road, where it was effectively an open, dark market for drugs, murder for hire, weapons,
Kidnapping wasn't human trafficking closely tied to Bitcoin?
Yes, and so why it was a choice currency for that is because it was largely private, and those sectors and those people don't get banked. Your account would get shut down.
There's no audit. They can't come and get your Bitcoin if they don't have your password, etc.
Yes. So the paradox in this is that Bitcoin and these currencies are open source systems. So though they're encrypted, anyone can download a full ledger of the full history of the network. So with the aid of governments and analytics firms, it's generally deducible through a couple of different factors, mainly what on-ramp you're using to purchase Bitcoin. You can map identities to encrypted wallets. So there's a popular theory that Bitcoin was a honeypot leaked by the NSA to catch illicit actors.
Oh, interesting.
So I don't know if you've heard of this.
No,
but
I hadn't heard that. That's
so, and then the other clip would be like, it's much, if you're going to launder money or if you're going to do illicit activity and try to launder it and get away with it, it would be far more advantageous for you to use the $100 bill or the traditional banking system, because there's no open record of all that activity.
Because it's
and
not all.
Even if you get caught in the banking system, it requires subpoenas, week-long, diligence from those firms. And so that is like undeniably a fixture within Bitcoin's history and why it got so popular in the early stages. Yet it's a privacy nightmare for criminals and not an effective tool due to its open source nature.
So that's helpful. It may have started with illicit activity that's become something else. All right, we're about out of time, so I want to ask you something just pragmatic for students here. Some of our kids are listening to this and are like, oh man, I'm all into this stuff. But what if you're like, I'm not really this? What we all really want to know is this. Should we buy Bitcoin today, and how much?
This is not financial advice, so I want to cover legal bases, but I don't have a firm answer. I would say I wouldn't advise anyone buy Bitcoin unless they have personal conviction in it, because it's a volatile asset and because personal finances are, extremely difficult to navigate. There's a lot of other things that could be used as a debasement hedge, but if you have the conviction, inflation's running hot, the US dollar is weakening, I want to buy something that can kind of prevent the erosion of my purchasing powers out of the dollar. You could buy land, you could buy gold, or you could buy Bitcoin as an expression of that trade, and I would feel, generally comfortable. It's the world's 7th largest asset, so it's not like it's still in some niche internet category. It has a larger market capitalization than silver. So it's very mainstream at this point. So if you want to express a debasement hedge, I think it's one of the easier choices than buying a gold bar or land.
What year did you graduate from Harding?
2022.
2022. And this is the sort of work and the sort of thought that Bennett's already doing. If you're listening and you're one of our students, I hope you'll be looking for seminars he's offering on campus and ways to connect with him. This is a really great alum, and so glad to have you on the show today.
Well, thanks for having me. And yes, would love to connect with anyone. I'm on Twitter at bholloway24 or in the Harding email network, bholloway2@harding.edu.
Thanks, Bennett. Thanks, guys. We'll see you next time on With Honors.